If there's one guy who's buying this dip today, Alan, I know it's you, so don't let me down.
So I don't know if I should take it as a compliment that I could give people a jolt. I have optimism. Optimism wins, and it's done very well so far. So what I'm paying attention to this week is that we continue to make new highs. That's important on a weekly basis across the board in the major big three, but we're going to be negative on the week. So that is a key reversal technically. We've seen this in the past, so it's important, as with anything, more important to see how things react here, not how they act now, but how they react now that we've had this pullback. Does it get some downside follow-through, or did the buyer step up one more time?
Okay, so right now we had a little bit of a push around a Boeing headline, and maybe we would try and close above that 3,300, but it doesn't look like it's going to happen unless there's a miracle in 15 minutes, Alan. So,
right.
I mean, to your point here, the reversal on the week, it's hard not to see how that stands out, right? The negative number we haven't seen in a while, but other than that, I mean, it was like since the August, move higher, and then October's break of 3,000. Yeah, it's been nonstop. So why should we care about a percent?
It's been more than 10%. It's been more than 10% straight up. Now, for me, the 3,300 is not as important as 3,200. We've talked about 3,200 repeatedly. That was the upside target after the breakout of the range you just talked about, when it broke out above the 2,800 to 3,000 range. That targeted 3,200. So that is an important floor to keep an eye on down below on a weekly basis. Also, the NASDAQ, it went up 7 straight weeks, and this is going to be the first week that it's down, but it did make new all-time highs again today. So this can quickly be voided. This reversal top can quickly be voided. All we have to do is rally and make new highs, and then we start over again, and that it's no longer bearish.
Sure. All right. So volatility, VIX finally, gets a bump. We're at 15.2. I know vol. If you look at VVIX, it had actually been kind of creeping along, even as VIX was dropping, and flirting with 12s and 11s there for a little bit. So what are we to make of the volatility spectrum right now? I mean, is this just business as usual, stocks down, VIX up, or is there something creeping? Because I know if you look out a couple months, there's some strange things going on with futures around primaries and stuff like that.
Right, but if you look at the VIX, the overall trend, it's a lower high than we had with the January little spike, that mini spike. And that's what's important. Every time it's whack-a-mole. Every time it pops up, it gets whacked back down. And so even at 15, we have not rallied that much. Coming in today, I think we were up about 50 cents on the week. Obviously, that got worse. But let's see where we are by middle of next week, by the end of next week, and see if we're back at the 12 or 13 handle, and see where we go from there. But if you're measuring volatility, do not ignore, this is a big day in treasuries. On the past couple of days, we had a breakdown below the 175 level on the 10-year note, which was a 130 level in the futures. We pushed above it. So that targets 132 in the futures, which corresponds to that extreme low that we had at 1.5% in the 10-year note. So everybody should focus on that, because we're resuming that overall downward trend in treasuries, and that the rally in price. So is that a sign of instability? I think that's more a sign of potential concerns than anything else. It's obvious that the president's going to do what he wants to do as far as pushing down rates and pushing down the dollar. And we had a temporary respite, or a reprieve, I guess, and rates did bounce back up to near 2%. But overall, the trend is still very much down, and look for that to continue downward. Now, at the same time, does that make stocks more attractive? Mm-hmm. Probably. So it's they're all tied together, obviously.
The 1-year chart in the VIX, again, we've seen 12 hold once more, Alan, and it's pretty amazing to see just how persistent that floor has been since Jan 2018. However, that being said, I think you're kind of hinting at this earlier, our VIX spikes keep getting smaller and smaller. Unless we move past 15 and a half and get into 16, then we might be looking at a kind of a lower high for VIX. Now, look, I know people are going to say, hey, you can't do technical analysis on the VIX. I'm not really. All I'm saying is that since the paranoia trade...
Yes, you can.
You can? Okay, maybe you can.
You can use technical analysis on anything.
Beautiful.
But what's important for me, the VIX is that we did not take out the lows, even though we've made a repeated highs in the S&P day after day after week after week after week. We never even approached those April lows at 11 and change.
Right.
And it's nowhere near the lows that we saw at 10. We were below 10 in this, I think, in 2018.
Yeah.
So there's more downside in the VIX, and there's more upside in stocks. I'm certainly not going to say it's over, even though we've had an extended move. I'm going to stick to my 3,500 in the S&P. How we get there, it may be a little bit more fun than people want. But you don't get straight up markets. I mean, October, November, December, January, I'm not good with numbers, but that's 4 months. Yeah. 4 months of essentially absolutely straight up. Nobody was selling into it at all. There were no major corrections. It's just been easy riding, and that's when you have to sell. You have to sell too soon, bank the money. If it goes higher, so what? Yeah. That's why we're here. You're not gonna buy the low and sell the high. You want to take a nice chunk out of the middle.